Good morning, Uganda. You're still with us here in studios. I was paying attention to what Felix was saying over there. I think we need to appreciate what culture is and what it does come with. Now, today we're going to be focusing, rather than this particular section of the GMU agenda, we're going to be focusing on financial inclusion. Now, what we're looking at here as well is the fact that oftentimes we talk about these things but don't probably hope that the people or the public does understand, but there is always a week where they get to involve the people. I have two gentlemen in studios here that I'll be bringing to you later on real quick, but I think I should introduce them so that way we could actually get into our report on financial inclusion. Right next to me here is Henry Mbaguta, who is Assistant Commissioner from the Ministry of Finance, Planning and, of course, Economic Development there, but from the Financial Service Department. On the extreme end, there is Joseph Lutwama, who is the head of business environment from Financial Sector Deepening. But before we get into this particular discussion, I have a report for you that some of our very own here did have from UBC. Now, looking at the fact that this week is Financial Inclusion Week, and stakeholders in the financial sector are indeed converging in Kampala to discuss the gains and future of financial inclusion in Uganda. It is noted that whereas financial inclusion has increased in Uganda, with a 78% Ugandans accessing financial services or a bank account, many of the bank accounts are indeed dormant and owners cannot afford to use them. Now, the multi-stakeholder annual FSDU Financial Inclusion Symposium is therefore held under the theme Making Financial Inclusion Right. The Minister for Finance, that is Matia Kasaija, Central Bank Deputy Governor Louis Kasekende, and World Remit co-founder of World Remit, that is Catherine Wine, visiting the country among others, gave their keynote speeches at this particular event. And then after we're done looking at that report, we shall be back here discussing the same issues.
The number of Ugandans financially excluded remains stagnant at 22%, as it was in 2013 when the last FinScope survey was made. Improvement has been identified in the informal sector, where the percentage of the financially included leaped from 52% to 58%.
In 2006, less than a quarter of the adults had access to any formal financial service, whether it was bank, mobile money, deposit-taking microfinance institution. Today, close to 60% of adults have access to a formal financial service.
We see that mobile money seems to be the driver of financial inclusion. But also there are issues around literacy, how literacy links up to financial inclusion. We see that being literate plays a very big role in enhancing a person's ability to access financial services. Men
are seen to use more of the formal financial institutions, while women are more accented to the informal sector.
We see women with the willingness to be in the financial sector, but they lack the financial muscle to sustain themselves into the financial sector. So that has led to exclusion. Also, what we see is that women are too busy, they are too engaged, one with their businesses and their family.
Mobile money has been the game changer in increasing financial inclusion in Uganda.
The biggest gains in financial inclusion in Uganda came from mobile money services. People needed a means to pay each other, person-to-person payments, remotely, because cash can only happen when face-to-face.
As you know, mobile money drives financial inclusion. So we have seen also before the issue of taxes, there's been a lot of expansion of telephone services networks to villages. So that brings more people who are able to access network.
However, recent changes in the tax policy, imposing 1% tax, now reduced to 0.5% on withdrawals, increases the cost of transacting using the platform, and experts are worried this may affect the gains made in financial inclusion.
We finished data collection around March of this year. Now, these issues around taxes and policies came a little later. Perhaps if the study was done around about this time, the findings would have been different in terms of people's perceptions and opinions about that.
David Matovu for UBC.
David Matovo there bringing us that particular report. Now, real quick, I will reintroduce the two gentlemen here with me in studios. Right next to me is Henry Mbaguta, who is, of course, from the Ministry of Finance, Planning and Economic Development, and he is Assistant Commissioner from the Finance Service Department. And at the extreme end, there is Joseph Lutwama, who is head of business environment from Financial Sector Deepening Uganda. Now, this is a very, very key issue to discuss, or rather a very key topic to discuss about, and we've seen in our report there a couple of statistics given in regards to things like inclusion, things like mobile money come in, and also the challenges that come with it. But real quick, let us understand what financial inclusion is.
Thank you. Good morning, viewers. I've been introduced. My name is Henry Mbaguta from the Ministry of Finance, and part of our task is to make sure that Ugandans access financial services. And access to financial services or financial inclusion refers to a situation where our people, all Ugandans, can access financial services, useful financial services at affordable rates, because it's one thing accessing, it's also another thing affording it. And this is a broad range of financial services, including savings, including credit, including payments, including insurance. So it's a whole array of services that we classify as financial. And as you have noted, we still have a sizable part of our population that is excluded. And therefore the objective, and part of the objective of this week, is to bring this to the forward and create awareness about the strides that Uganda has made in terms of including its population, and to look at and also observe those that are still excluded and forge a way forward. It is also important to note that a big number of our population still remain in subsistence farming, and we need to work the figures that are involved in subsistence farming vis-a-vis our own figures that we have in terms of access to financial services or financial inclusion.
Okay, something to add on there?
Probably the other thing he has not mentioned that can also be considered under financial inclusion is the quality of financial services. So this week we're not only looking at whether people have a bank account, whether they are using a bank account, but we're also looking at the quality of the service of that bank account or from their bank account. And that's what we mean by getting financial inclusion right. It's not enough for someone to just have a bank account. They need to be able to use it, and the quality of that service should be the most appropriate quality, yes.
Interesting. So that's why we come to the theme, getting financial inclusion right.
Yes.
Interesting. Now, why does this really, why is it something we should be concerned about? Why should it matter to us if we're talking financial inclusion?
Financial inclusion is really about finance. Everything we do in life revolves around finance. Money is a medium of exchange. Without money, economic activity cannot happen. And financial institutions are there to intermediate economic activity, to be able to be the engine and the fulcrum upon which economic activity happens. So when you're talking about prosperity, and we're talking about Uganda become a middle income country, and we're talking about Ugandans getting out of poverty, part of that puzzle is having access to quality financial services. Yes. So as government engages in other different interventions to get people out of poverty, helping them access financial services is one of those pieces of the jigsaw puzzle that need to be solved if we're going to be able to improve the social well-being of Ugandans. I need to be able to save if I'm going to grow from a smallholder farmer into a commercial farmer. I need to be able to borrow. And after I've acquired all that wealth, I need to be able to ensure my life, to ensure the sustainability of my wealth. So that's why financial inclusion is very critical in us realizing our national aspirations.
Okay. Now, I'll throw this at you. Yes, we've seen things like mobile money come up and sort of widely solve a few problems there in regards to inclusion. But we still have a challenge with insurance. Still have a challenge when it comes to banking and banks and things of that nature. How do we get to deal with this particular issue? Because yes, pretty much, of course, not entirely covered, a big percentage can access or can use mobile money. But again, you cannot talk mobile money without linking it to these two things. And isn't that really a challenge or a gap to fill?
I think it's been, and let's just take a step back and look at what government has been doing. First of all, financial inclusion is something that has to be done by both government and the private sector players. And the government, on its part, has done a lot in terms of designing the appropriate policies, in putting in place the right regulatory framework. Today we see an increase in the outreach of the banking sector. We see an increase in the circles. You know how government has attempted to invest in circles and support communities to start their circles. We've gone as far as the village savings groups. Now, that is, government has been promoting that infrastructure to make sure that our population can access financial services. Now, mobile money is a payments system, and just like we take money in the banks, just like we take money in the circles, and you use the platforms there. Mobile money came in handy to help in terms of facilitating that transfer between one person and another, between creating a payments platform that the population can use. And indeed, it has been very, very significant in terms of contributing to financial inclusion. Mobile money is part of the broader concept of digital financial services. And in digital financial services, we are looking at a broad range of things, apart from the transfers, which are mainly the payments. That's why part of our definition of financial inclusion is accessing financial services that go beyond payments. And we are looking at micro-insurance, micro-pension. All these brought together will certainly constitute the bulk of how we can include our population. And so it becomes important that we look at mobile money in the broader sense of the digital platform. And in that way, you bring in more people. You bring in more players, and that is basically the main objective.
Okay, you had something to add, Jim?
Yeah, I just wanted to say that financial inclusion is a journey. Each one of us is on that journey, and I think it all starts with payments, and that's why mobile money has really picked up. 5 out of every 10 adults in Uganda actually use mobile money, whereas 1 out of every 10 use banking services, and 1 out of every 100 use insurance services. But as Ugandans become more productive, as economic activity increases, there will definitely be a need for all these other different services. And then we'll begin to see Ugandans moving along that spectrum of financial inclusion, because you cannot insure what you do not have. Yeah, but as you begin to have assets, then there is a need to insure your assets. When your business begins to grow, then you will need capital, and that's why the bank comes in. So I think it's very critical that to appreciate that as people prosper, then all these services will come into play. In fact, you will notice that even when they say that mobile money is has come at the forefront, most people actually use mobile money to receive rather than send. So you can actually see that's the journey. You start by receiving, but if you're able to use the resources that you receive to engage in economic activity, then you move along the spectrum of financial services.
Interesting. Now let's go to the week. We're saying Financial Inclusion Week. When you tell someone, oh, it's Financial Inclusion Week, what is it for people to understand? Because yes, we're talking financial inclusion, but let's take a look at the week in itself. What is it you're really looking into? What are you focusing on? And also, you know, someone can choose and say, oh, maybe once every now and then, but what you're doing here is every year. Why are we looking at that, really?
The week is just really there for emphasis. It's not that it's the only week when we talk about financial inclusion. Financial inclusion happens every day. It's part of our daily lives. But we use the week to emphasize the importance of financial services in people's lives, and just to bring to the forefront the need for each one of us to be able to leverage or take advantage of the financial services to improve our social well-being. So it's also an opportunity to increase awareness about opportunities that formal financial services bring to our lives. It's an opportunity for government to reflect on the progress made in facilitating financial inclusion in the country, but also an opportunity for the different actors in the financial services industry to reflect on what they have done right and what still needs to be done. Yeah, so that's why we have a series of discussions and engagement throughout the week to really bring the point home that we need to strengthen and improve and work on our efforts to be able to make sure everyone is financially included.
Okay. Now, real quick, what role do you as financial sector deepening Uganda, what role are you playing in the week?
Financial sector deepening Uganda, we, first of all, just to put everything into context, we're a non-profit organization whose mandate is to make financial markets work, especially for the underserved. And here we're looking at women, we're looking at youth, we're looking at small and medium enterprises, we're looking at forcibly displaced persons. And currently we are funded by the UK Department for International Development and the Bill and Melinda Gates Foundation. Our role really is as a market facilitator. We come alongside government, and that's why we're here with Henry from the Ministry of Finance. to see how we can be able to work with government to provide an enabling environment for financial inclusion. But also we work with different actors in the industry to see how they can develop appropriate products, talking about quality of service, talking about usage. We work with them to see how they can be able to develop appropriate products, how they can be able to build efficient market infrastructure that can be able to bring down the cost of accessing and using these financial services. Yeah.
Okay, interesting.
So our role is really to see how we can catalyze and work with the different actors to make sure that these financial markets actually serve the underserved.
Okay, I'll throw the same question to you. In what role you're playing as the ministry? Because of course later we shall get into the strategies, but right now the roles you're playing to make sure that this comes to life.
The role of government and more so the Ministry of Finance can be summarized in about 4 specific functions. One is the policy frame, because without a policy framework it becomes next to impossible to include your population, because you want to be able to identify the targets, you want to be able to know the products, you want to be able to know what really is excluding your population. Now the second main function is about legislation. For anything that is being done, we must have guidelines. We must have the do's and don'ts of how to do that. And that's why, for example, in the mobile money sector, we have the mobile money guidelines that guide the operations of that. The third one can be looked at in terms of as a direct participant. And the government once in a while comes in and looks at those areas that are either not attended to, that are either underfunded, and comes in to supplement the efforts of the private sector. And finally, of course, to make sure that things are properly supervised and they conform to the standards that are needed. So those are the major broad functions of the government, of the ministry, and yes, because we cannot, we wouldn't want to out-compete, to crowd out the efforts of the private sector, so we must be a bit cautious on what is it that you can offer as government, supplementing the efforts of the private sector and not crowding them out.
So how are you making this happen, in terms of bringing together the market elements so as to achieve this goal?
One has been to have a center point at the Ministry of Finance. That's why I come from the Financial Services Department, so that anybody from the financial sector, and this is the banking, the non-bank, where you come from insurance, you come from capital markets, you come from microfinance, you're able to have a one-stop center where you can discuss and address issues of the financial sector. And then, of course, over time, we've been, as government, a number of policies have been put in place in the insurance sector again, and the capital markets, and the banking sector. We have legislations that hitherto were inhibiting financial inclusion. We've addressed the shortcomings that were in the Financial Institutions Act. Banks can now undertake agent banking. We have bank insurance. All these have come in to create a framework, to create an environment, provide an environment for financial inclusion.
I'll throw the same question to you, and how are you actually achieving all of this that you have in order to make sure that you get financial inclusion underway?
Yeah, like I said, we are a market facilitator. We've done quite a number of things. Like I said, we're working with government to improve their business environment.
Yes.
One of the things that we're currently doing is we're working with the Uganda Registration Services Bureau to be able to reform the movable collateral regime. What that is expected to do is to be able to increase access to credit. Currently, if someone is to be able to access credit, you need either a land title or you need a house which you can be able to mortgage. But with the movable collateral regime, you'll be able to use anything other than even your land title to be able to access credit, whether it is a stock of produce, whether it is a bicycle, whether it is a radio, you'll be able to do that. Now, if you look at the dynamics within the population, you'll find that while most people are active, economically active, in one or the other, but only 20% of the others do actually have titled land.
True.
It doesn't mean they don't have assets. They do have assets. But most times, those assets are not recognized by the financial institutions. Now, what this regime does would be able to recognize all those different assets that people have. That essentially increases the scope and the spectrum of the credit pool that people can be able to access. So that's part of the work that we're doing with government, but we're also working with the private sector to be able to design appropriate products. Part of the work that we're doing is we are working with banks to see how they can be able to develop appropriate products, for instance, for refugees. Yeah? We have a huge population of refugees in Uganda. Now, when they're in Uganda, they usually stay here for close to even 10 years. Then they need to be active and they need to access financial services. But it's one of those segments that has not been able to really take advantage of the financial system. So we are working with the banks to see how we can then be able to design products that can be able to access them, give them access to financial services so they can be able to benefit from them. So those are some of the things that we're working on with the different players. We're also working with the Bankers Association.
Okay.
They have come together, the different banks, to put in place or to develop a shared platform for agency banking. Now, agency banking is where banks were able to bring banking services closer to the people, where you transform the corner, the shop at the corner into a bank, essentially, where people previously would just go to buy sugar and buy other household items. They can go to the same shop and they can be able to open up bank accounts. I mean, they can be able to place applications for bank accounts. They can be able to withdraw. They can be able to deposit. They can be able to send money. So what the shared banking platform does is I can be able to access all the banks from one shop. That's if it has a capacity. So you don't have to have many shops to be able to mirror all the different banks. So you have this shared platform where all the banks can actually be accessed. Irrespective of which bank that you bank with, you can actually be able to access that platform from this one shop or two shops in the community. So that essentially opens up the banking sector to a broader section of or broader segment of the population because they have come together. So we are working with them to see how that can then be able to deliver, how that can be delivered to the broader segment of the population.
Interesting. Now, let us see. I know here and there we've been pointing out a few gaps that we are seeing, but maybe in detail from both of you, the gaps that you have identified when it comes to this particular matter of financial inclusion.
There are quite many. Of course, the most critical one that sometimes most people tend to lose sight of is people just don't have money. Yeah, or they don't have sufficient funds. Now, one would say that that's really beyond our control, but it's a factor that we need to be able to recognize. But beyond just having money or not having money, the other critical things that are there, and one of them is the high costs of financial services. And you've heard time and time again people complaining about the high interest rates. The high interest rates for accessing financial services.
Okay.
The other big challenge is infrastructure. And that essentially affects how far the financial services can go. Talk about mobile money. In places where you don't have sufficient electricity, you don't have sufficient power, the chances are that network is not very good. Now, if the network is not very good, then definitely you cannot be able to receive and send money via your mobile phone. The other thing is people just don't know. They just don't know about the services. Very few people know about insurance. Very few people know about formal banking. Yeah, so that is a challenge. The other one is, of course, you don't have many branches. Most of the banking branches are actually almost 70% of the banking branches are actually in the 3 major cities in the country. Yeah, so that is an issue of accessibility and proximity to the services. So those are some of the challenges that we're actually grappling with or trying to solve to increase the financial inclusion frontier.
Something to add?
Government, certainly we've been on the receiving end of these gaps, and a couple of them have come through, which I think we are going to put our heads together to see how we can address them. The first being the issue of the policy and regulatory framework around the digital financial services. The feeling out there is that the public thinks the DFS or digital finance or mobile money is not adequately, is not comprehensively regulated and supervised, and that gives us an area that we need to address, so that supervisory roles are clearly identified from the MNOs, from the UCC to BOU, for us to know who does what and who is responsible for what. So the whole issue of the policy and regulatory space is an area that we still need to address. There has also been concern on the regulatory costs. There's a feeling that the costs for regulation of the sector vis-a-vis our neighbors, Kenya, Tanzania, there's a feeling that in Uganda they are still very high. And also the issue of the level of competition. The sector seems to be still closed, and I think if there are incentives that are provided to open it up, probably that would increase competition. But finally, something that came through is the issue of the KYC, the Know Your Customer, because there is a strong sentiment that My friend Joseph, what you subject him to open an account should not really be the same requirements that you subject his old mother or father in the village, because the accounts are for different purposes. So there is a strong sentiment that we should do a tiered know your customer to enable our peasants, to enable our communities be receptive to provide them the basic data that can help them open an account or get included in the financial sector.
Okay. Now, Joseph, I'll throw this to you before we come back to him. Do you have any targets, really, that you're focusing on and saying, well, this is a section of people that we seem to see fall back, so we need to involve ourselves to get that group of people and involve them?
Yes. Of course, financial inclusion is a challenge across the spectrum, irrespective of level of income or level of education, or whether you're in urban or rural areas. Yeah. But in our particular case, we focus on those segments that up to now have largely been neglected or have been underserved. And those are the women. We see from statistics that there's a 9% gap in terms of access and usage of financial services between men and women. Yeah.
Okay.
9% of the times, men are more likely to have access to financial services than women. The other key area segment that we look at is our young people. Close to 80% of Ugandans are below the age of 30. Yeah. And most of these are actually active in the economy, but most of them don't have bank accounts. Most of them don't have access to these financial services, and yet this is a backbone of our economy. The other segment that we're looking at is SMEs, micro, small and medium enterprises. Again, these form a bulk of the enterprises that bring bread and butter to people's lives and people's homes. And then, of course, the most recent one which we're looking at are the forcibly displaced people. Those numbers are increasing. Increasingly coming to Uganda, and they need to be served, as well as the disabled.
So we're looking at refugees.
Yes.
Okay.
So those are the segments that we're focusing on. It doesn't mean that the other segments are not important.
But this is where we see a huge gap.
Is that in all the things that we do, we are working at ensuring that the entire spectrum of people are efficiently served. But as the banks efficiently serve all the other segments, we ensure that the needs of those particular segments are taken care of.
Okay. Now, I don't know if you have anything to add on that.
Just to add that, of course, as government, the interest, the focus, the objective is really to deepen, deepen the financial access to financial services. That means me and you who are accessing financial services, let's get to a higher access level. And then the second one, of course, is broaden. Broaden, make sure that you bring in as many Ugandans as you can into the financial bracket.
Interesting. Now, where do we see ourselves as Uganda in terms of progress in financial inclusion here? Also, maybe where we could fall in terms of ranking within the region.
We have made some good progress. Yeah. 12 years ago or 10 years ago, more than a decade ago, almost 5 out of every adults were putting money under the pillow or just keeping money with themselves. But as I speak now, 5 out of every Ugandans either have access to a bank account, insurance service, and mobile money. So that's a huge progress. Okay. The exclusion rates are still very high at 22%. They're still very high. But considering where we were 10 years ago, that is progress. Yes.
Interesting.
In terms of East Africa, we're not doing badly when you compare ourselves with our peers. Yeah, but also we're not the best.
Okay.
Yes.
So
Kenya is ahead of the pack. Close to 8 out of every 10 Kenyans, adult Kenyans, have access to formal financial services. For us, we're still at 59%. So there's still room to grow.
Okay.
We're better than Burundi, we're better than Rwanda, and better than Tanzania, but we still have work to do.
Still work to do. Interesting. That for me is an eye-opener, really, because oftentimes we just talk about these things and don't know what they actually mean or imply to us. But real quick, why does this particular week, financial inclusion, matter to, for example, the providers, if we're looking at individuals and, of course, policymakers? Why does this week seem to be very relevant?
The Financial Inclusion Week has offered us an opportunity to get together in one room and look at these look at the different interests holistically, and that is very, very important, because if the providers discuss their issues and the government discusses their issues and the beneficiaries discuss their issues, sometimes we lose a point. But once we are together, we are able to get a common cause out of that. The second one is that, and I wanted to bring it out, that financial literacy has been an ongoing activity. We actually have a strategy for financial literacy spearheaded by the central bank. And there are very many segments of the strategy that address financial literacy in primary schools, in schools, and looking at the segment of under 16-year-old, looking at all the segments. And this week puts this whole strategy into context, that we are out there, we are into the provision of these services, we are trying to object to bringing everybody into the financial services, but also to make sure that every Ugandan has a fair understanding of what we are talking about as the initiators of this whole concept of financial inclusion.
Interesting. Now, real quick, focusing on the week still, before we go into a broader picture, what do we expect to achieve by the end of the Financial Inclusion Week?
One of the key takeaways we hope to get from this week is to be able to be rejuvenated towards our strategy of achieving a financially included Uganda, by addressing those issues that need to be addressed. We are hoping that there's going to be a refocus across the spectrum of stakeholders, from government to private sector, even development partners, on what we should focus on to be able to get to the next level of financial inclusion. Beyond access, people have access to bank accounts, but many of them are dormant. Yeah, so we hope that out of this week and out of the discussions we've had throughout this week, the different stakeholders will begin to reflect on some of the key takeaways we've had in this week, to begin to refocus their strategies to be able to get us to the next frontier of financial inclusion.
Interesting.
Now, well, one thing that comes out of the week is And the takeaway really for government, which I had said, for us, our work is to put these issues together and work around them to provide answers to the issues that are being raised. But I think more important is the issue of the financial inclusion and exclusion is a strand issue. When we say 59 are included, or 78 are included, who are these 78? And what kind of inclusion is it? And then that puts us on the drawing board to design programs that will address the different strands. Because you are not going to have a one-fits-all approach to financial inclusion. So to us, it gives us a menu where we can best to design better and more appropriate programs for our people.
Interesting. So now also this goes to both of you as we wind up really, but what does the future of financial inclusion look like for you moving forward? Like if we look at the entire picture of what financial inclusion is, where do we see the future of it? What do we see it look like?
The future is bright, but the key elements of financial inclusion, affordability, access, quality, are very, very critical. And in the programs that and policies that the government we design as government, we must be very critical of that. That should constitute part of our agenda. So, yes, you are going to have, you can have 90% of your population accessing. But how does this stand? How does this stand out against the and what I mentioned in the beginning? How does this stand out against your numbers that you are picking out of your farmers who are doing subsistence farming? Does it add up? Does it create a point where you need to critically analyze? But also in terms of going forward, financial inclusion has been driven by technology, and with technology, it's an innovation, and there are terminologies that are all across the country, regulatory sandbox and all that, and the issue is how do you make sure, as the regulator, as government, these technologies, because technology is very fast, how do you make sure that technology doesn't leave you behind? You're able to catch up with it, and also as you catch up with it, how do you facilitate it, not to inhibit it? Because if you clamp on the new technologies and etc., you block innovation. So it's a delicate balance that we have to carefully look at how this inclusion is coming through, what are the enablers of this financial inclusion, and how can we have a balancing act.
Indeed. Joseph?
Yeah, I think the future is interesting. We are going to see technology playing a more critical role in increasing access and usage of financial services. But technology also comes with its risks. So it's going to require different stakeholders across the spectrum to change the way they do things.
Indeed.
They cannot continue to do, we cannot continue to have business as usual. So that means that we need to tighten our belts and control and manage the disruption and the change rather than allowing the change to change us.
Indeed. Well said. Now, any last remarks from both of you so that we can finally close this discussion?
Well, personally, I think the efforts from government, the efforts from our partners, the FSD, the efforts from our regulators, the efforts from the private sector are yielding fruitful results. And we need to pursue this path of financial inclusion as a team.
Okay.
And we don't need any blame game around this. Let's keep the discussion going. Let's keep the conversation going. And I'm sure it's Ugandans to benefit out of this.
Indeed.
I would say that it will take a collective effort. The different stakeholders need to work with each other. Even in the industry, companies and the different players need to work with each other, because in addressing the financial inclusion challenge, it will take that collective effort for us to be able to meet and realize our aspirations.
Well, thank you so much, gentlemen. What we've been focusing on is financial inclusion, but also not forgetting the Financial Inclusion Week is actually happening. But well, right next to me, Henry Baguta from Ministry of Finance and Planning and, of course, Economic Development, Assistant Commissioner from the Department of Financial Services. And he has been very clear about a couple of things in regards to what their role has been and how policy comes into play. Joseph Olutwama, who is Head of Business Environment from Financial Sector Deepening Uganda. And I must say, gentlemen, you've been very, very helpful in regards to us understanding what financial inclusion is and what the week is all about. Now, in regards to addressing the gaps, they have been very, very clear. Probably, I don't know, can anyone just go and find out what is happening, or in terms of the week?
The highlight of the week, unfortunately, was yesterday evening when we had a get-together of the different actors.
So can someone probably go on your website and find out what has been happening? A report?
If you go on our website, www.fsduganda.org, you can be able to find a lot more information about financial inclusion, not only this week, but a whole lot of resources that can be able to enlighten you about our efforts, but also what's happening around the world in the area of financial inclusion.
Henry?
Well, our offices are open. And we are always open, and any information that is needed
in regards to what has been happening, people should go and find out. Well, the information is available for you, so probably find out and see how best you can work along. As players, of course, as individuals, we need to take interest in things of this nature. Thank you so much, gentlemen. I do appreciate your time. Thank you so much. Don't go away. It has been GMU. Earlier on, we had Felix talk in regards to agriculture and an event that's going to be happening. And now we've been looking at financial inclusion. I will be back. I am coming back with Felix, and then later on, Ruben. Don't go away.